Hi guys, welcome back to the channel. In today's video, we'll be talking about how to identify high probability trading setups. No matter the strategy you trade, whether you trade the divergence, you trade support and resistance, you trade trend lines, or even smart money strategy and other strategies, spotting high probability trading setups will always put you at the right side of the market. Trading with high probability setups will put more money in your pocket and remove less from your pocket. So today I'll be teaching you guys how to identify high probability trading setups while trading with smart money strategy. Probability is the chance that a given event will happen or will occur. So we identify high probability trading setups by trading specific price actions which has given positive results over and over again. You understand what I'm saying? We trade price actions that has occurred over and over again in the market and it has given us a positive result. That is what I mean when we say we trade high probability trading setups. What I'm trying to explain is like trading from an area of confluence. That is an area in the market where two or more structures come together to form a high probability buy or sell zone. Hope you understand what I'm saying. Now, what do we need to see in the markets or in the price charts which will tell us that this trade is a high probability trading setup? We need to identify a break of structure with an institutional candle or a change of character with institution candle. So if you don't understand what that means when I start to explain the price chart, I hope you will understand better. Number two, you need to map out your supply or your demand zone correctly. I said you need to map out your supply or demand zone correctly because most times people keep saying this strategy doesn't work, whereby they make mistake while mapping out their zones. So like I said, secondly, map out your supply and demand zone correctly. So number three, the institutional candle should leave an imbalance. Yes, because institutional candles, they are candles with large momentum. So when those candles move with momentum and break structure, you need to see that candle leave an imbalance because we know that price will always come back to fill the imbalance. During the mentorship program, I didn't explain or mention anything about imbalance, but today I will just talk a little bit on imbalance or teach you how to spot imbalance. And lastly, we need to find where liquidity is resting in the market. We need to find where liquidity is resting in the market. Like they always say, if you can't find liquidity in the market, that means you are the liquidity. So let's move to the price chart. Let me show you some of these examples. Remember, I said number one, identify institutional candles with break of structure or change of character. Number two, map out your supply and demand zones correctly. Number three, identify where there is imbalance. Those candles, they always leave imbalance, so spot the imbalance because price will surely come back to fill the imbalance. And lastly, find where there is liquidity. Look for liquidity in the market. So let's move to the example. So what can we see from here? Let me zoom in a little more. So number one, we say we should identify an institutional candle that breaks structure. So what do I mean by institutional candle? You can see this candle that has large momentum, this bullish candle with large momentum. You can see each of them has momentum, it has a full body and it moves and breaks structure. So this is what I mean by an institutional candle. So when you see candles with this kind of large momentum, that's an institutional candle. And when you identify your break of structure, you can see it clearly. When I zoom out, you can see it clearly from here that we are in an uptrend and now we got this institutional candle that breaks structure. So we have identified the number one, which is identifying an institutional candle that breaks structure. So number two, what are we going to identify? We go to identify our supply or our demand zone. So this is the number two. We are in an uptrend, so we'll be looking for our demand zone. So this is our demand zone. Very, very simple to identify. This is the last bearish candle before this bullish move that breaks structure. So this is our demand zone. And remember, they said the institutional candle must leave an imbalance. So people might be asking, what is imbalance? So I won't be going deep on imbalance. What you need to understand is when you see price leaving this kind of gap, you can see there is a gap between this middle. This is an imbalance. There are people who trade only imbalance, but I'm just teaching you how to trade supply and demand. So maybe some other time I might talk about imbalance. But when you see this kind of gap, you can see there is an imbalance here. So when price was moving, it left this imbalance, which we know price will surely come back to fill this imbalance. And for those, you remember I said there are people who base on trading imbalance. So when you look from here, you can see there is a gap right there, and price came back, filled the imbalance. You can see it right here. Price came back, filled this imbalance, and it moved. So there are people who trade only imbalance. Imbalance is the same as fair value gap, so it's the same thing. Okay, we've identified the number 3. We identified firstly break of structure with institutional candle. Secondly, we identified our demand zone, and thirdly, we have identified our imbalance. So let me type it out, imbalance. And note, if you are new to this channel, please consider subscribing to this channel, because I keep making videos that will really help your trading journey. So subscribe to the channel and be part of Born to Trade family. So we have an imbalance right here, and we have an imbalance right here, so I'll be leaving it over here. Fourthly and lastly, what are we going to identify? We identify where liquidity is in the market. So looking at your zone, there is no liquidity resting at your zone. If you don't know how to spot liquidity, you can go back, watch my video on liquidity. If you don't know how to map out your supply and demand zones, go check out the video. You can see liquidity is resting right here. You can see it. We have these 2 touches before price came lower to sweep. That's the liquidity. Okay, we have liquidity resting below here. And what can we see? This is a high probability trading setup. What can we see? After price built the liquidity, it came back to our zone. After it came back to our zone, you can see price moved to our direction, and here is the take profits, and price smashed the take profits. So this is a very good example. I know you're getting a clearer understanding. So let me show you one more example in this chart before we move to a different chart. So what can we see here? When price was moving, you can see price was moving with a very large candle with momentum. You see these candles, they have momentum, but over here price slowed down before it now breaks structure with candles that have momentum. So this is equally a good one. It's a good one because it broke structure with an institutional candle. You can see it right here. This was a break of structure, and after the break of structure, what are you gonna map out? You're gonna map out your demand zones. So right here we have a hidden zone right here. For those who know how to spot a hidden zone, looking right here, you can see that we have a hidden zone right here, and we equally have a good zone right here, a good demand zone right here, and we have mapped out our zones. So what's next? You can equally see that price left an imbalance. You can see it right here, that imbalance is resting right here. So you seeing that imbalance is resting below this zone, you can see that it has reduced the probability of this zone playing out. You can see that it has reduced the probability of this zone, and this one has higher probability. Why? Because imbalance is resting before this zone. I hope you're understanding what I'm saying. Imbalance is resting below this zone, which has reduced the probability of this one playing out. So most times it do play out. Like I said, even high probability setups fail. So most times it do play out, but from what I'm explaining now, this zone that is lower here has the high chance of playing out. And now what are we gonna look for? We go and map out liquidity. So what can we see? You can see that liquidity is resting right here. So mapping out liquidity right here, you can see it has equally reduced the probability of this particular zone playing out, because liquidity is resting below here, and price really need to clear this liquidity resting below here before it moves to our direction. So mapping out that liquidity and imbalance resting below this particular zone, you see it has reduced the probability of this particular zone playing out. Although the zone gave a little reaction, it moves before it came back to break lower. So measuring that particular move, you can see we got about 50 pips moves. So if you took a trade from here, you must have won about 50 pips. Depending on how you manage your trades, it would have been a break-even trade, or you might have lost trade. It all depends on how you manage your trade. So what can we see? Price came lower. Price came lower. What did it do? It filled this imbalance that is resting here. This imbalance, price filled it, and then tap into our zone. Even though price spiked below our zone, we got a spike below this zone before price moved to our direction. So you can equally see that the trade played out even though there was a spike below our zone. So what would have saved you and helped you avoid this spike below our zone if you use the confirmation entry? Remember, I've never advised you to use a risk entry. So if you use the confirmation entry, it would have been a good one, because if you go down to your lower time frame, if I'm analyzing from here right now, you can see that this was a high and this was a low. Price came, broke the high. Now it came back to tap to this demand zone right here before it moves. So you will see it clearly when you go down to the lower time frame. It's just that I've spent many times with the chart and I can see things even from the higher time frame. And if you understand what I'm saying, you will equally see what I'm trying to explain right there. So price moved to our direction, breaking another structure. So you can see when price broke structure, these candles are very weak. You even got a pullback here before the break, so it wasn't the best probability. So I hope these two examples right here explains it better. Number one, you identify your break of structure with an institutional candle, that is a candle with a very large momentum. Number two, you try to map out your zone correctly, because this second example here, this zone, it was a good zone, but it wasn't at a good area because imbalance is resting below and liquidity is resting very close to it, which made it a very low probability. But this one had a high probability because imbalance is resting above the zone and liquidity is still resting above the zone, which made it a high probability. Let's say if you can be able to find like 3 out of the 4 things I mentioned, you are good to go. Even low probability setups, they play out like I explained, they play out. So we're going to a different chart right now for another example. So let's go USDJPY and see what we have right there. I think I have something right here, so let me find it. Okay, this is it. This particular chart, I've used it in the video, in one of my videos I used it. So let's see what we have here. So what can we see right here? We can see that price left a demand zone, it came back to the zone, respected the zone, and it's moved. While it was moving, we got this pullback. After the pullback, price moved with a very large candle, and you can identify it. That's your institutional candle. And the institutional candle, what did it do? It break a structure right here. Hope you can see that it broke structure right there. So you've identified the first one, an institutional candle that broke structure, which is this one. So let me shift this, so let me delete so you can see clearly, which is this is the institutional candle, and this is your pullback. This pullback gave us the number 2, which is what? Which is mapping out your zone correctly. So this is our zone right here. I hope you can see it. This is our zone. And the number 3, what can you see? Price left an imbalance. You can see it. It's left a very big imbalance that needs to be filled. You can see there is this gap right here. That is your imbalance, and price needs to come back to fill this imbalance. So you've identified the third one, which is your imbalance. Okay, so this is your imbalance. Price will come back to fill the imbalance. And what are we going to identify? Fourthly, you can see this is your liquidity resting right here, and right there you can see price was building liquidity. And I hope you understand what liquidity is all about. Price built liquidity right there and there. So identifying all these things, you can see that this is a high probability setup. Let's say keep it right here. This is better and more clearer. So this is liquidity resting here and here. Even before price came lower, you can see that price swept the liquidity resting right here before it came lower to sweep the liquidity resting below here. So what can we see? Price came back, tapped into the zone, respected the zone very well, and now it's moved to our direction. So have you seen that high probability trading setups can always put you at the right side of the market? You know, you are trading with a real money, you are not in a demo account, you are trading with your hard-earned money. So trading low probability setups will likely make you to lose your money. It's not, doesn't mean that low probability setups doesn't play out. It plays out sometimes, but trading with high probability setups keeps you at the right side of the market, and it helps you win more trade as long as you know what you are doing. And remember, another thing that will make a difference by trading this way with this strategy is when you use the confirmation entry. So it's like I have one more example before I will call it a day. So what can we see right here? You know, we are in an uptrend, and right here we got a change of character. We saw an institutional candle give us a change of character. So this is our change of character, and I hope you all understand what change of character is all about. If you don't know what is change of character, go back and watch my video on market structure. I hope that video will help you understand what I'm trying to explain. So like, let me give you a little example or a little explanation. Change of character tells us that direction is about to change in the market. Break of structure happens in direction of the trend, and change of character usually happens against the trend. So we got a change of character which tells us that the trend is about to change, and you can see that we got institutional candles, large candles that broke below that gave us this change. of character. And what next are we going to be looking for? We're going to be looking to map out our supply zone. Now we are in a downtrend, and what are we going to be looking for? We're going to be looking for our supply zones. We got a little range before this change of character, and right now this zone is our supply zone, but this zone is too large. It's too large. Measuring this zone, you got about 60 pips, so you can actually refine this zone. You can refine it down to this candle right there. You know, I like refining most of my zones. Most times when I refine my zone, I miss a lot of trade. I missed a trade this week that moved over 400 pips because I refined my zone too much. So it was really painful, but refining my zone has been my style, and you can always try things out to see how it goes. So I've refined my zone right now, and what are we going to be looking for? I already mapped it out. You can see liquidity is resting right here, and we got our imbalance right here. You can see it clearly. This is imbalance right here, price left imbalance, and you can see price came back, filled this particular imbalance, and now it has filled this imbalance. So what do we see? Price comes back, tap into this zone, and it moves to our direction, clearing this liquidity resting right here. So this is how it works. Try to trade from a zone with high probability, a zone that is likely to play out, not trading zones with low probability. You are trading with real money and not fake money, so don't risk your money anyhow. So this is how trading works. Thanks for joining me in this video. This is still me, Solomon Wisdom, aka Born to Trade. If you're interested in learning how smart money strategy works, you want to understand how this strategy works perfectly, watch my other videos. I offered a free mentorship on that, and a lot of people are glad they joined the mentorship. So check out those videos. If you are new to the channel, please kindly subscribe to this channel. So thanks once again. I'll be uploading more videos, and I hope to see you at the top level. Thanks once again.